What is up, YouTube? What is up, guys? Welcome back to another post-trading analysis video. We had a nice trade today on Solana, and we're going to get into that in a minute. We also had a trade on Euro, which is something I haven't shared yet, but I took it Tuesday. But I've just been very busy working on a big project for you guys, which will be available to all of you. So I'm so excited for that. I've been putting in the work for it. So can't wait for that to be released. But for now, let's just talk about the trades we have taken. And let's talk about Solana first. Like, this was a trade. You saw the proof of entry. It's already on my X as well. But let's build some context first, okay? Because we know that we are in this macro range, right? We've been talking about it for a while. We're in this macro range. We had our range low. We had that deviation of the initial range low, leaving behind a 6-hour demand zone right here. So me personally, I would absolutely love a mitigation of this order block for a potential TCT Model 2 schematic, which will cause a rotation back up towards that range high, okay? Just an overall idea that I absolutely love. Just following structure from high to low, on, let's just say, an 8-hour time frame or even a 12-hour. We can use a 12-hour. We simply just have one main market structure pool of a high and a low. And right here, we came back to the EQ, confirming this as our range high and this as our range low. And we have just been ranging ever since. We have been ranging ever since. We came into the premium section of the bigger range right here, which is basically just the price action between the EQ and the range high. And we never really did anything. Like, we formed a range here, but it was never a distribution in any shape or kind. And then we got that move down, but there isn't that much to hold price up right here. You had some demand, but technically speaking, like, price is just coming down here, leaving an inefficiency. And then right here, we just have liquidity lows, right? You can see that with the trend line, but they can also draw it as a trail of liquidity. We just have some liquidity lows. So, we know that ranges, they can have internal rotations from highs to low before even taking an extreme point. So we've just been ranging. So pulling our most important structure within this range, I was like, we have a lot of liquidity below. Bitcoin was looking weak. And our structure from high to low, we simply have lower highs and lower lows. And you can apply this using the 6 candle rule on the 1-hour time frame that I've been teaching in the Wyckoff tutorial, which is on my YouTube. You can just go and check it out. I have a part 1 and a part 2. Well, I taught you guys all the concepts that you need to know to understand how I'm trading. So we were trending down, right? And when we're trending down, we pull our range from bottom to top right here. We kind of have our range in this way. And you can look at it from two POVs, right? We have our range from low to high, making this your low and that your high. But you can also go on the lower time frame on, let's say, the 30 and call this an internal uptrend. Where right here, if you make that red, it's your structure from the low up. You can kind of pull your range in that fashion as well, and then you pull your range from the top down, so you kind of have this, okay? And obviously, what you guys need to realize is that when you're trading a Wyckoff schematic, you always target the low of the range, okay? So we got that deviation 1, we got that deviation 2, making this your Wyckoff low. So if you're trading the Wyckoff, technically speaking, the low of the Wyckoff is your target, okay? Very important to note down, but we can just use this range for now. So we were trending down, right? We were trending down, and I was just also checking for, do we have any supply or resistance above my initial range point, okay? I was just scanning through time frames, and then right here on the 1 hour, what we can see is a 1-hour order block, 1-hour OBYF order block with an inefficiency below it, right here, the fair value gap. And that was kind of my area of where price could deviate into, deviating that range high for a potential TCT Model 2 or TCT Model 1 schematic, okay? So I was checking price action, and I was absolutely loving how we were approaching the range high. Just look how we were approaching the range high. We were just leaving behind a massive trail of liquidity where each low is a higher low. Each low right here is a higher low, indicating that there are so many stop loss that will be triggered once price hits that first one, which will cause a liquidation event towards that range low very quickly, okay? Because anyone that longs here will probably put their stop loss below the previous low, right? If you long here, most people put their stop loss below the previous low. Same goes for this, and same goes for that, etc., right? So all these lows will have stop losses below them. So once that first stop loss gets triggered, that will cause a sell order, because if you buy and your stop loss gets hit, they sell it back, right? So that's why once that first stop loss gets triggered, it will cause that tiny spike down, and you just have stop losses below it, which will cause more and more triggers, making a very fast move down, which we can see right here. But coming back towards the range, we had our range low, we had our range high, and then right here we got our deviation 1 right here. And then simply after that at 7 or 5:30 p.m. my time, we got that deviation 2. So if we extend our high to our new deviation high, you can see you got yet again another deviation. And this deviation actually did something, right? This deviation mitigated the supply zone that we were talking about, also leaving price with no reason to come back up again if we broke structure. Because obviously, how do we confirm a TCT Model 1 schematic? When do we confirm the full rotation towards the range low, which is also technically this point, these 2 points? We have to break structure between the lowest point between tap 2 and tap 3, which is right here, up towards your third tap high, okay? So you need to check structure between those 2 points in order to confirm distribution and confirm the TCT schematic. So let's check what type of structure we have. We can just go on the 3-minute, and what we can see, if we apply the 6 candle rule, you have higher lows and higher highs right here, higher lows and higher highs, following the 6 candle rule up towards that third tap high, making this your market structure low right here. The moment price closes below that low, that's when you confirm your breakout structure, and that's when you can target and you can go short right here, and you can put your stop loss below that third tap high, and you can target all the way down towards the Wyckoff range low, which is right here. But there was nothing below that low to hold price up, and nothing to defend price from taking the actual range low. So you can just easily target here, which is also what I did. And then you have a nice 2.7 risk to reward. Now, the reason why I took this with a 2% risk, because I did take it with a 2% risk, because our return to zone was looking so good. I've never seen a liquidity trail like this. It was absolutely amazing. And not only that, while breaking structure, if we zoom in, we actually got some sort of demand to supply flip and even a supply chain, okay? So right here we can see this 3-minute order block, okay, which is basically our demand zone. Price just missed it, but technically speaking, this entire range is demand. So just because we just missed that 3-minute OBOF, I was like, nah, it's still fine. Okay, still fine. You just missed it, but demand still has been mitigated, and that demand zone caused a move up. But instead of price putting in a higher low for a higher high exactly in that area, we can see that it actually flipped into a lower high and it breaks structure. Okay, it broke structure. So exactly in this move up, right? Exactly in that move up, sellers stepped in and dumped price lower. You can clearly see the flip in demand to supply, where first demand was making higher highs and higher lows until right in this point where instead of we got a higher high, we got a lower high for a lower low breaking structure. Okay, our demand flipped into supply, making this our supply zone. Not only that, we can go on the 2-minute and we can clearly see that there's some sort of supply chain going on where this 2-minute supply zone created this 2-minute supply zone, created this 2-minute supply zone we just talked about. So we can clearly see that supply is taking over, and right in this moment is the crucial pivot point in the chart where we can see that the supply is actually stronger than the demand, right? Right here, if you connect these 2 candles, you can see that it's an actual flip. So we can see that sellers were pushing price down, and right in this last order block and this last supply zone, that's where we confirmed that the sellers were stronger than the buyers and we broke structure. So we had a supply chain and we had a flip And whenever I have those extra little confirmations, that's just when I add to my risk. Okay. You can put your stop loss right here, but I just added to my risk and kept my stop above the third tap high because it's the safest thing to do. You don't want this order block to get wicked and you to just dump down and you get stopped out, right? So RR was amazing. It was around the 3 risk to reward right here. And on the 3 minute break, which was a bit higher up. There you go. So it was a 2.7 risk to reward, which is absolutely amazing. And I took it with a 2% risk, netting me over 5%. And I still have a tiny position running because I'm targeting potentially that 136 area because there's nothing to hold price up in this lower section of the range. And we do actually have a reason to come lower because we can grab these sell side liquidity lows and mitigate that demand, fill some imbalance, on the left. So just running like 25% to see if we can take it towards that low. But just absolutely beautiful, guys. It's absolutely beautiful where you have the deviations at the high. You have deviation 1, deviation 2, where that deviation 2 also mitigate that 1 hour order block. You had an amazing liquidity trail of just stop losses, creating sell side liquidity, and you had that demand to supply flip with the supply chain. It's like all the stars were aligning. Like it's such a high probability setup. It's not even funny. Okay, I was dead ass thinking to take this with a 5% risk. Like I was so confident. I told my friend like literally like, yo, bro, these are the trades where you realize how simple trading can be if you just be patient and wait for these type of setups because they appear once in a while, but you can just go way higher on your risk, right? So maybe this appears like once every 2 weeks, like this clean where you have to return to zone and you have to flip and you have to chain. And you even broke back inside the volume profile. I forgot to tell you guys, but your break was also back inside the volume profile, which is just extra confluence, right? You see that break structure is below that black line, indicating also a rotation from a volume perspective. It's like if all those stars are aligning, you can just wait for those. They happen like once every 2 weeks probably, and you can just triple down on your risk and you make 10% in a single trade. So I have noted down this setup and I was like, okay, next time I'm taking it with even more risk because even for those type of setups, 2% is like taking it easy, right? 2% risk is taking it easy because I was stressing absolutely zero about this trade, like absolute zero stress. So maybe add a bit more stress by adding to the position, right? But yeah, absolutely amazing trade. TCT Model 1, the break confirmed it, and we had all the extra variables as our extra confluence. So that was a trade on Solana, guys. Still have a bit of a position running, 25% to just see if we can take it towards that 136 low. Now, the second position or I want to discuss with you guys is a trade I actually took on Euro, which was which day? Yeah, it was Tuesday, also around the same time. So let's build some context first, okay? Because since then, some price action has actually happened, but we basically had this massive, massive range, and we had a distribution here. We had a TCT. Literally, we had a macro TCT Model 1 schematic. And I remember this so well because this is actually exactly where I started trading Forex. It was in the summer of last year, which is July 2023. So I actually took a short right there, but I didn't take it all the way down to here. But I was like, holy shit, my first trade on Forex was literally the high. I didn't hold it through, but still it was funny. I'll never forget it. And from there, we have kind of been accumulating. So we had a 1, we had a 2, and we had a 3. But technically speaking, it was never a valid accumulation schematic, never a valid TCT Model 2, because this was your extreme demand. It was this daily order block, right? Right here. So it was never valid. Um, so yeah, maybe this is like an extended Model 1 that flows over into a Model 2 where we just mitigated extreme supply. Who knows? Because we did have a distribution in this circled area as well, right? Like, I don't know. I just hope that Euro is going to, have a retracement, maybe come back down all the way to mitigate that and for this to be the actual third tap, right? I just hope we're gonna come down because at the end of the crypto cycle, I have to switch my USD to euros, and I don't want like if we pump, bro. If we pump, like even if you pump like 5%, which is totally possible, because DXY normally dumps, like your capital is worth 5% less in euros, right? Like who would want that? So yeah, let's just zoom in. We have been pumping. We came into extreme supply, so you can always expect some sort of rejection from extreme supply. And then we also broke way outside of the volume area, right? So I was like, initially we were trending up. So we came into that area, and let's just go back to actually that moment. We came into that area, and I was just following structure, right? I was following structure, so we had higher lows and higher highs. Very simple, guys. Just higher lows and higher highs. And we had some support right here, which is just these two downwards candles before the aggressive expansion towards the upside, leaving an inefficiency behind, which could be an area to potentially put in a higher low, but we could also start ranging here, right? I was also aware that this could be a range where we could potentially have a distribution in the making, okay? Where we have a range here, and this is your tab 1, and then that's already your tab 2, okay? And this could be your tab 3 before the move down, which is actually what was the case. But at that moment in time, I was like, okay, this can either be just a higher low for a higher high, or it can turn into some distribution of some kind. But I was just in the back of my mind, the context was we're trending up, but we are coming into extreme supply, so we can expect some sort of rejection or at least a range formation, some sort of consolidation, right? But what I absolutely love right here is that you have this massive inefficiency, right? You have this massive inefficiency. It was actually on a news pump. Like we can call it a fair value gap. You can call it an imbalance. You can call it a fair value gap, an inefficiency. It's all the same. Okay. And what I absolutely loved is that we came down there and then we formed a range formation. Okay. We formed a range formation. So following our local structure on like the 30-minute, we kind of had like a distribution here, which had a 1, a 2, and a 3, and that kind of broke towards the downside right here, and we formed the range. Like, okay, we had a local distribution right here that kind of broke towards the downside. That's already completed. It didn't work. Let's see what can happen from here, because we do have the buy side liquidity above. Again, each high is a lower high, so we have a high, lower high, lower high, lower high, lower high, and it's just a trail of liquidity here. There are buy side stops waiting for us above us. We just formed the range, right? We just formed the range right here. Let's use our session indicator. So we just had a range. This is our range high, and that's our range low. Okay, that was it. Range low and range high. We obviously pull our range from bottom to top because we broke structure here. Like I just discussed, we broke structure. So in a downtrend, you pull your range from bottom to top. And if you want to know all these rules, go check out the Wyckoff tutorial part 1, Wyckoff tutorial part 2 on my YouTube. Okay, go check that out. So we had our range low on Monday, had our range high on Monday, and since then we just started ranging, right? We just started ranging, and we were coming up towards that range high, and I was actually looking to short it if we took it because we were building up a massive trend line sell side liquidity, where again each low is a higher low, and we had the Asia low and the London low waiting for us in the discount section of the range, where this is a market session indicators, guys, for the people that don't know. It makes my candles colored, and the orange colored candles represent price action in New York. Pink represents the price action in New York PM, and then Asia is in purple and London is in blue. Okay, so it's very nice. I can just click this, and then it will show the color candles of that session, and it will immediately show you, where your session lows and your session highs are, which is very nice to know when you're trading Forex, because price loves to, draw itself to session liquidity points. Okay. So I was watching for a short down there, but we just missed it. Like we never took that high. So I never got a short entry. But then we did take the low. And it looks like an equal low, but if I zoom in, guys, it just took the low. It took the low ever so slightly, but it did take the low. And something I can give you as a little golden nugget is that it happens all the time where you form an accumulation schematic when you have a fair value gap or a massive imbalance on the left. And think to yourself, why does that happen, right? Well, an accumulation schematic indicates market maker involvement, right? Market makers are actually filling their long positions. So they grabbed all this sell side liquidity, all these sell orders that were filling their buy orders. And this was the ultimate liquidity grab. But it's not just grabbing liquidity inside of the range of all these stops getting taken. It's also grabbing liquidity from breakout shorters. Because trust me, there are a lot of people who see price come near that low and they think to themselves, hey, there's nothing but inefficiency on the left. Let me just short for a quick move down towards that demand zone, right? Trust me, guys, that happens. You have breakout traders. And that's why when you have a fair value gap, a massive fair value gap on the left, and you form a range, most of the time you form an accumulation schematic, right? You form an accumulation schematic. So that's just a little golden nugget I'm giving you right now. And from there, I also absolutely loved the timing, okay? Because I've been telling you guys about the pre-sessions, okay? It's very common and very known that an hour before your session actually opens, you get an aggressive move. So New York opens for me at 3:30 p.m. So this is 2:30, an hour before New York. And that's when you also tend to have good moves. So what happened is that we grabbed all inside sell-side liquidity, probably also trapped some breakout shorters in this wick, and then we're just checking, what's happening next. Okay, so I'm pulling structure from the top down to kind of give me a view of like when are we breaking structure back inside the range, and that was right here. But what I absolutely loved is that we got that move up on 1430, right? We got that move up on 1430, but then if I go on a lower time frame right here, guess what happened? We're assuming that market makers filled their long positions right at 1430. Okay. Now price had its move up, but we're coming back down again. But guess what happens on New York Open? Right here at 1530. On New York Open at 1530, price gets a tiny retracement before pumping higher where we broke structure, right? So right here at 1430, they mitigated the last liquidity point right here, grab that last liquidity point on the left, and then push price higher, breaking structure. So do you really think that if price comes back to this demand zone that was created while we broke structure, if we are assuming that this is our tap one, and this is where they started filling their long positions, and this is where they push price higher, do you really think that this demand zone that was created on New York Open and that low is going to get taken? Obviously not. Obviously not. Because the way we came down is that we broke structure here, right? So we broke structure. So expectational order flow is a higher low for a higher high. This was the only demand zone that was created. Inside that demand zone, we had a more refined zone, but you just have to wait for a structure confirmation either way to see, which one you would have mitigated. But both were fine. Okay, both were fine. So we broke structure on New York Open after sweeping the main low on an hour pre-New York, and then we came down into our area of support and our POI, leaving a nice liquidity trail behind, right? Where each high again is a lower high, indicating buy-side liquidity. So you know that, okay, I'm zooming out again, and I'm zooming out, and we know the timing now. Like, okay, we have our tap one, we have our tap two, coming in here could be our tap three. A Wyckoff Model 2 accumulation schematic applying our rules, a TCT Model 2 schematic. Okay, so again, just like on Solana, how do we confirm the long? How do we confirm the rotation towards the range high? Okay, well, we need to break structure from the highest point between tap 2 and tap 3 up, down, or down towards the third tap low. Okay, it's an accumulation now, so it's down. Well, looking at our structure, we can go on the 2-minute. It will give us more clear structure. We have a low, we have a lower high, lower low, lower high, lower low, lower high, lower low, breakout structure. Right here, you have your breakout structure. So again, expectational order flow after the break is obviously a higher low for a higher high. Boom. Right? Very clean. So what I did is I entered on the break. Right here, ended on the break because the retest is not guaranteed. Stop loss goes below your third tab low right here, and then you target the high for a lovely 3 risk reward. And was just so clean with the timing. I was so confident in this low not being taken because it was on New York Open that caused the break of structure, and the target of the accumulation hasn't been hit yet, right? And you can see this aggressive move up. Why is this move up so aggressive? Well, we just had liquidity above it, which I just showed you. This causes that trigger order, which is that snowball effect of just orders getting triggered after each other, causing like a big spike up, right? So absolutely beautiful to see and to show you guys that, hey, I'm not just talking crap afterwards, because a lot of people are good traders after the trade happened and they look back on it. I want to show you guys something. Let me pull it up right here. Let me pull it up. Let's see where it is. Okay. I want to show you guys my thought process. I want to show you guys my thought process. I was discussing the trade idea with a friend of mine right here. You can see right here when I'm commenting this 1731. Let's find that in the chart. 1731 right before we entered, right? Boom. 1730. What I was saying at 1731, we entered at around 18. I said euro is in a high time frame uptrend. We are in extreme premium pricing regarding that macro range I showed you, but that is more regarding swing longs. Expectational is a higher low for a higher high until proven otherwise. We left behind inefficiency and filled it for 50%, right? And I was talking about this inefficiency right here. We left behind inefficiency, filled it for 50%. Started a range that is looking like an accumulation schematic, talking about this range. Took out the range low exactly on pre-New York. New York Open, pushed price higher, breaking market structure, leaving behind demand. Not so weird to think they are pulling price back down, leaving a return to zone, which is this local liquidity trail I was talking about, to fill inefficiency, mitigate last demand before grabbing all liquidity above. Question mark. Take on this and I tag my buddy, right? And that's exactly what happened. Like once you understand timing, combined with TCT schematics, especially on euros and commodities, bro, or on forex and commodities, but euros, in my opinion, the best pair, is like you're literally trading with the market makers. Like literally, you're trading with them. Because I also said right here prior to that, which I couldn't show or I didn't show on the first, but like the euro loves to make everyone think we're going to fill all the efficiency on the left right here and then just accumulate and pop up. Remember? Because I remember it from another situation where the exact same thing happened. And I also have proof of entry, but I showed it on my Twitter actually. So we could go to my Twitter for a moment, just showing you guys that I'm the real deal. I was discussing with this guy, had a few back and forth with this guy. He was like, I can't make 10% a week, but we agreed to disagree. So no bad blood between me and him. But I was showing my trade right here. Boom. Absolutely nailed it, guys. Like absolutely nailed it. That's that higher low for the higher high trade on euro. You can see it around that 27th of August. Absolutely beautiful. Made me some good money. So yeah, guys, it's just that once you start understanding and once you start seeing these things, it's like it feels like you're always on the right side of the market, right? And I'm just trying to make you guys aware of it that this shit actually works. Like it works. Okay. So big things are on the way. TCT is going to be the new wave. We're going to absolutely change the fucking game, guys. And you can either watch me do it or you can be a part of it. So see you guys in the next video. Love all of you and peace out.